Good morning, gang. Happy Monday morning. To those of you who are new here and making your way around in the Preparedness Month Collaboration that Prepper Potpourri and Sutton's Days put together, welcome. I am Pinball, and this is Pinball Preparedness. We are going to talk today about getting your financial house in order. And, well, a lot of the regulars here on this channel will know most of what I'm going to talk about here. For those of you that are new, this is something that's very important for y'all. Now, we all know what has happened with COVID and the economy in the last 18, 19, 20 months here, okay? Inflation is up. Wages are all over the place. Employers can't hire people. People are leaving jobs because of different mandates, whatever would be. So the financial world right now is in utter chaos. If anybody noticed the stock market last week, it was down every day of the week. Okay, we dropped about 700 points on the Dow last week, so about 2%. Those of you that have been following me for a long time know that since the beginning of the year, I have expected the Dow to be below 20,000 by the end of the year, or 35 now, just to give you an idea. And I've said that from experience in working on Wall Street, everything the sort that way, okay? I mean, just reading the signs, knowing what's going on. Is it perfect? No, okay? This is my read on it, okay, and has been since January. The interesting part was last week you had all 6 major investment houses, investment banks, say they expect a 20 to 30% correction in the market, okay? Now, 20% means that we drop some 7,000 points, 30% means we drop somewhere between 10 and 11, okay? All right, so if we drop 7,000, that puts us to 28 on the Dow. If we drop 10 or 11, that puts us down to 24, 25. Close, okay? So at this point, what am I seeing? A 40% drop. Now, here's where it gets interesting after last week. Y'all, whether you know this or not, September, October are historically the worst months for the market historically, okay? And so far, September hasn't failed to live up to that billing, and we still have more than half of this month and obviously all of next month to go. This week is going to be very interesting because the market itself, okay, the investment banks themselves are starting to get out of the market. They're worried that the Fed tapering, i.e. buying back bonds, is going to slow down, okay? And that is going to put inflationary pressure on the market. That is going to cause basically everybody to need to come up with money from somewhere. Well, if you need to get money from somewhere, what do? You take it out of your savings. And for a lot of people, that would be invested in stocks, bonds, mutual funds, whatever it would be. So if money starts coming out, i.e. selling, market goes down, okay? It's just kind of how things work. So this week, we have some very critical numbers coming out. Tuesday, we have the core consumer price index number, all right? It's expected to remain unchanged at 0.3, but again, we all know the Fed hasn't got basically anything right. So if CPI goes up even to 0.4, okay, inflation, you can expect the market to sell off. Then on Thursday, we have initial jobless claims. That's expected to go up, i.e. more people filing for first-time unemployment. That's going to pressure the market. And then we also have on Thursday, the Fed Manufacturing Index, the Philadelphia Fed, okay? That's expected to go down. Again, that's another negative for the market. So we have, of the 3 economic figures that are coming out this week, 2 of them, they're predicted to put pressure on the market, and 1 of them probably will. If anybody's going to say they haven't seen any price increases over the last month, please let me know where you're shopping because I want to go shopping there. So what do we do as preppers? How do we hedge ourselves against all of these problems? And there's a multitude of ways, okay? Near term, intermediate term, and long term. Near term thing, I don't have to tell anybody about. Stock up, okay? You're buying food today that you can eat 6 months ago or 6 months from now. 6 months ago, good luck. Eating 6 months from now, that's a guaranteed return on investment. I mean, if you're buying a can of green beans right now, and let's just say they're $1 to make the math easy, and a year from now they're $1.50, that's investing right there, and you've got pretty much a guaranteed 50% return on your money. Try finding that in the bank, in the stock market, whatever. That's how you can play inflation to your advantage, okay? What you're buying now, you can eat later, and then you're not paying tomorrow's prices. If you think about when you buy a house with a 30-year mortgage, you're paying, if you bought it today, 2021 prices, hoping the value of the house goes up, but in 2040, you're still paying 2021 prices, but now the house is worth 50%, 100% more, whatever it would be. Same idea, just on a smaller scale with your food, okay? Intermediate term, how do you hedge against all this? Pay off your bills. Now, I'm going to say something that kind of goes against some of the typical rules of how to pay off your bills. People that watch my channel normally know I'm a big follower of Dave Ramsey. Okay, the guy's a genius when it comes to finances, for the most part. There's a couple of things I disagree with him on, but for the most part, his paying off the bills, his Financial Peace University is brilliant. However, what it doesn't take into account, and Financial Peace University basically says pay off your highest interest rate debt first and work your way on down, okay? What it doesn't take into account is the complete mismanagement of the economy of the federal government. It doesn't take into effect the World Economic Forum. And those things you've got to watch for. So what I am suggesting is, yes, pay off your highest interest rate things first, on secured loans first, which would mean pay off all your secured loans, your car payment, your house, things that can be repossessed, foreclosed upon, whatever would be. Pay those off first. That way nobody can take your car, nobody can take your house. Then you go after the unsecured stuff. Then you start with the credit cards. Then you go into student loans, whatever would be, because they're not going to try to foreclose on, repossess that hamburger that you ate at Applebee's that you put on your credit card. And they can't suck your brains out of your ear and say, well, gee, we're taking our student loans back, and this is what we're going to do. Okay. So that's where my advice would be. And again, I'm not giving anybody financial advice. This is my opinion. Let me qualify that one in here real quick. My advice, my own personal plan. I'm just telling you what it is pay off your secured loans first, then pay off your unsecured loans. I know it sounds counterproductive. You're going, I'm paying 24% on my credit cards and I'm only paying 6% on my car loan. Yeah, but again, like I said, they can repossess the car. They can't repossess the burger. Okay. So that would be intermediate term, how I'd go about it. Okay. That's how I am going about it. Okay. Or how I have been, let's put it that way. For those of you guys that know, we recently paid off the house. We've got that down. So, yes, I'm practicing what I preach. The third thing, okay, and this is your long-term strategy, is to purchase precious metals, okay? Silver, gold. I mean, if you really want to play a little bit, you could go in copper. Copper's cheap. You're going to wind up paying as much in shipping as you are for the copper if you buy it. I've done videos before on how to buy precious metals as a prepper, okay? If you look through here, you'll see it. I think it's How to Buy Silver as a Prepper is the title of the video. And I kind of explain everything to you. Precious metals are not a trading vehicle, okay? I know there's people out there that love crypto and everything like that, okay? And I'm not a fan of crypto. Okay, I'll just say why. You could have bought crypto earlier in the spring for $60,000. It went down to below $30,000. You lost half your money. Now it's back around 45, so you've made some of it back. Okay, very volatile. Preppers don't do risk. Okay, we're trying to avoid risk. That's why we prep. Okay, so precious metals are something for the long term. They are a wealth preservation idea, not a wealth accumulation. Now, I know there's all sorts of stories out there. Gold could go to 10,000, gold could go to 100,000. Okay, that's great. And I could go land on Mars tomorrow too. It's not realistic. Will the price of gold and silver go up? Yes. Okay. I mean, precious metals are the one thing that's been used as a currency basically since mankind has existed. All right. Yeah, we're not using seashells or salt or anything like that for currency anymore. But you go back 2,000 years and you can go back, to the pyramids in Egypt, and you can find gold coins. Gold will always have some value. Silver will always have some value, especially seeing how both are also used in industrial construction, your computers to cell phones, whatever it would be. So buying gold and silver is good as a hedge against inflation. It is good for wealth preservation. The dollar collapses, we turn into Venezuela, whatever, that gold and silver is still going to have value because it's not an American dollar, it's gold. You can go trade the gold for euros or yen or whatever the hell you want to trade it for, and it's going to have value where the dollar may not. In a complete SHTF situation, gold and silver will probably be your forms of currency for a while. And a few states have already started accepting it as currency, that you can go to the store and pay in silver or gold. There are some states that have started printing gold backs, New Hampshire, Nevada, I think Utah, a couple other ones. So a lot of people are seeing the value of precious metals. Don't miss the boat and go, oh, it's too expensive or whatever. Both of them are historically cheap right now. If you do a chart comparing the value of the dollar to the value of gold, gold is still at the same price it was back in the 80s, back in the 90s. Now, and everybody's going to go, well, gee, it was $288 back then, and it's $1,800 now. Yeah, but the dollar was worth different too. So as you're going up, gold, silver are cheap right now. Like I said, it's not something that you are going to get rich overnight with or whatever. It's something that you want to put away. If you can buy a silver coin for $25, $26 after premium, each paycheck or something like that, fine. Just stick it away, put it in a hat box, put it under the mattress, put it in your gun safe, whatever it would be, and just save it. Like anything else, just like your canned goods, you went out and bought 5 cans of tuna every week, and then after, 3 months, you go, holy crap, I got a ton of tuna here. Same thing going out and buying a coin. Go out and buy a coin, every paycheck or whatever, you get 2 a month, and all of a sudden 6 months from now, you go, hell, I got a dozen of these things already. Now you're starting to put something away that's, the other advantage to it is it's not easily spendable. Okay. So it's not going to be, oh, the pizza guy's here. Oh, hell, here's a 20. We'll just take it out of here. Try paying your pizza guy with a silver coin. It's going to look at you like you got 3 heads. So just some quick updates here on some ideas for planning your financial prepping, getting your financial house in order. But wanted to do my part with the Preparedness Month Prepper Collaboration. And I thank everybody who is participating in this. Tomorrow is Rogue Preparedness. So if you're following along, that would be tomorrow's day. Have a good Monday, guys. Pinball out.